Hi, I'm Roger Conrad. I'm a co-editor of Vital Resource Investor. And what I want to talk about today are three things that I think are going to make a lot of money for a lot of people in the vital resource commodity area. And these are gold, nationalism, and steel. And basically I think, just starting out with gold, this is a market that people tend to roll their eyes and think, well, nobody's ever makes any money in this thing. Well, it might surprise a few people. Take a look at the paper and notice that the price of gold is now broken well past its all-time high set back in 1980. And in fact, we've seen gold move above 900. People have made a lot of money in gold and gold stocks over the last 4 or 5 years, and we think they're going to do quite well going forward. For one thing, just looking at long-term, the way this gold is valued, and gold has been around for centuries, literally, as a primary store of value for all sorts of governments and people over that time. If you take the price of gold back in 1980, adjusted for inflation, you've got a price of around $3,000. So we've had some pretty big gains to date, but I think that shows that there could be a lot more ahead. And we're not making that prediction right now. But again, I think it shows that really we're only just beginning to scratch the surface of this thing. Now, of course, the primary thing that's really pushing gold up right now are basically two things. One is the fact that the U.S. economy has been slipping. Looks like very strong possibility of recession. In fact, you look at how Wall Street's handicapped, the odds of recession is now basically 50-50 in 2008. So that's, of course, alarmed a lot of people. We're in an election year. And the Federal Reserve has decided that it's going to do whatever it takes to keep us from really sinking into a deep recession. And we're seeing more comments from the Fed chairman and others to that effect. And that means lowering interest rates even at a time when inflationary pressures have picked up in certain areas. And what that means is that real or inflation-adjusted interest rates have very much narrowed and are now at very, very low levels. In fact, negative levels in some estimations. So what you have is a situation that's very, very good for gold. It's been very, very good for gold in the past, and we think it will continue to be going forward in the coming year. So, again, a very, very bullish environment for gold. The other factor pushing gold up is some of the political pressures that we've seen around the world. Of course, a nuclear nation, Pakistan, is now in something of turmoil after elections have been postponed following the assassination of the former president, Benazir Bhutto, who many thought would be the next president of that country. So that's bad enough. And of course we have conflicts, U.S. and Iran in the Gulf, very nearly turned hot a few days ago. It wasn't widely noticed, I don't think very widely reported, but in any case, a very strong case for more political turmoil. Gold thrives on that. Now that also brings up some of these problems around the world. Brings up the situation of nationalism, and resource nationalism is basically the tendency of governments and people in countries where when resource prices are rising, the places where those come out of to want to demand a higher take of the pie. And what that basically means is less investment. It means higher prices and tighter supplies for a longer period of time, and it's very, very good for companies that are able to navigate some of the operating risks. Another aspect of resource nationalism has been the strikes that we've seen in many countries, particularly in Africa, South America, and so forth. So, and particularly with large copper mines. So it's a very bullish picture, resource nationalism, again, for the big companies. And the fact that there are these challenging conditions has also led to another thing that's enriched shareholders, which is mergers. So pretty much every major metals company out there is a potential merger candidate. Now, the third factor, steel, that's one of the lagging stock groups in the vital resource area. We think it's a very strong one. One reason it's been lagging is because iron ore prices have been rising, energy prices have been rising, and that's really tightened up the whole situation for steel companies. Costs have gone up. But on the other hand, we're seeing huge building around the world, particularly in infrastructure, and that's increased the demand for steel. So we've had steel stocks weakening, the market for steel strengthening, and that's a very good formula for investors to get in on some steel stocks like Metal in Russia or POSCO in Korea. So thanks for tuning in. We'll see you next time.